Welcome back to the Market Bias Tracker Weekly Crypto Roundup. This week, the board told a story that most crypto participants did not want to hear. Pressure stayed broad, short bounces tried to appear in a few places, but the overall picture remained firmly on the weak side. Out of 50 tracked assets, only 3 finished the week with a bullish bias, 37 landed bearish, 10 sat in neutral. That kind of distribution is not a healthy market. That is a market under sustained pressure, and this week we are going to walk through exactly what that means. Starting with the overall tone. The average score across the board came in just above 3, on a scale where 5 is neutral. That tells you the board is not sitting at the edge of bearish territory. It is sitting inside it. The current market tone is one where even the assets that tried to bounce this week could not fully escape the broader pressure. When the average score is this low and the bearish count is this high, the tone is not ambiguous, it is clearly defensive. Now let us look at who actually led this week, because there were a small number of names holding up. FET came in as the strongest asset on the board with a score of 7, carrying a bullish bias and support, sitting back near the 19-cent area. HBAR and WLD both scored 6.5, also holding bullish readings. All 3 of these names are worth watching, but every one of them is carrying a short time frame caution tag called stack weakening on the 1 hour. That means the momentum structure at the shorter time frame is starting to soften even on the leaders. Strength is present, but it is not clean strength. On the other side of the board, the weakness was notable, and it reached some significant names. Ethereum came in as the weakest asset this week with a score of 1.75 and a bearish bias. SUI and DOT both matched that score, also sitting bearish. SUI and DOT are carrying trend friction tags on the 1 hour, which suggests the downside pressure is not just a clean flush, but a grinding, unresolved move. Ethereum is carrying an ATR stretch tag, which means it has already moved a significant distance relative to its average range. That kind of tag is a caution flag, not a green light. For the majors confirmation check, Bitcoin, Ethereum, and Solana all finished the week with bearish bias readings. Bitcoin scored 2.25, with EMA compression flagged on the 1 hour, which points to a coiling, indecisive structure near support. Ethereum scored 1.75, the weakest of the 3. Solana scored 2.0 with trend friction on the 1 hour. None of the 3 majors are confirming strength this week. They are confirming the same pressure the broader board is showing. That brings us to leadership quality, and this week it is narrow. 3 bullish names out of 50 is not broad leadership. It is a small pocket of relative strength sitting inside a market that is broadly under pressure. When leadership is this narrow, the risk is that even those 3 names are vulnerable if the broader tone does not improve. Narrow leadership can hold, but it needs the rest of the board to stabilize before it becomes meaningful. The main caution from this week is the ATR stretch tag. When assets have already moved significantly relative to their average range, chasing that move carries elevated risk. This tag appeared on Ethereum and showed up across multiple timeframes in the top caution list. Extended moves can continue, but they can also snap back quickly. That is the caution the board is flagging. Looking ahead to next week, the key watch is whether FET can hold its leadership while Ethereum either begins to stabilize or breaks further. Those 2 outcomes would tell very different stories about where this market is heading. The ATR stretch risk does not disappear overnight, so that remains the primary flag to monitor as the new week opens. That is your weekly crypto context from Market Bias Tracker. You can find the full board and all current readings at marketbiastracker.com. Everything here is market context, not a signal.